Palantir, a big data analytics company, has been making waves in the market since going public in 2020. So in today's video, we're going to explore their latest innovation development as well as the potential impact of their business. Also, if you like what I do, please check out the affiliate links down in the description about the equipment that I use. If you make a purchase while still in the same session, not necessarily buying anything that I'm proposing, but if you buy anything on Amazon while in the same browsing session, I may earn a small commission that may help the channel to grow. So thank you in advance for your support. With that being said, let's get back to Palantir. Throughout 2023, the stock market experienced a significant boost from the rise of generative artificial intelligence, or AI. Tech companies have been actively exploring ways to leverage this new technology or this development in this already existing technology in order to enhance their business, and investors have responded positively for the most part. As we enter the second quarter earnings season, one company to watch closely is Palantir. Palantir stock has had its up and downs, that's for sure, facing criticism from short sellers who have been questioning the company's business model and the reliance on public contracts. However, there are plenty of reasons to be optimistic about Palantir's future, especially their latest innovation, the homegrown artificial intelligence platform AIP. It has generated a lot of attention, and not just from people in this field, but investors in general as well. Speaking of AI, it is of course a multifaceted technology that will impact our daily lives. E-commerce companies like Amazon use it to recommend products based on browsing and purchasing history. Palantir developed its own AIP, showcasing its capabilities during a brief demo alongside their first quarter results. So during the demo, Palantir simulated the impact of a hurricane on a factory and then used AIP to assess the consequences of shutting it down. AIP was able to provide insights into the impact of customer orders, backlog, and revenue. Additionally, AIP also allows for manufacturers to run simulations and analyze the effects of chartering additional drivers before the hurricane. This demo has demonstrated to investors and also other kind of stakeholders how mission-critical business decisions can be made by leveraging data and AI. The potential use for this technology are vast and can revolutionize decision-making processes across the industry. While it is still challenging to assign an explicit value to AIP for the time being, Palantir's first quarter results may shed some light on the impact of this new product. In the previous earnings release, Palantir raised their full-year revenue outlook and posted a GAAP profit for the first quarter. Their CEO, Alex Karp, mentioned in an interview that Palantir's AI is growing exponentially. As we await the latest earnings announcement, investors will be eagerly watching Palantir's progress in the AI and how it's going to contribute to their overall business growth. The market's own developments also show us that they are also being hopeful in this time, like in this period of time where things can very often be challenging. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We know that the company will not be profitable for another few years. That much has already been priced in. We also know that Palantir is in a highly sophisticated area of the economy, and that it aims to become the analytic dashboard of the wealthiest entities around the world. The true debate is whether Palantir itself can stand the test of time, and whether the market will believe in its potentials to become something bigger and more critical. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of this is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as the business model to work with government agencies. Now, personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped the progression for more than 6 months. Ever since the price reached about $8 back in May of this year, the rest of the downward slide is probably caused by the habit of just going lower by default. Does this mean that the stock will reach new high very soon? Maybe not. But on the other hand, I do believe that Palantir will have a place in the future and that its price is due for some significant change as well. Given that it's been down by so much, the only logical direction that it's going to go is going to be up. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance. The company's flagship product, Palantir Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is its ability to integrate data from a wide variety of sources. The platform can work with structured and unstructured data, including text, images, and videos, and can also handle data in multiple formats and languages. This makes it an ideal solution for organizations with data spread across multiple systems and departments. It also provides advanced data analytics capabilities, including natural language processing, machine learning, and predictive analytics. Those features allow organizations to uncover hidden insights and patterns from the data. Another key advantage of Gotham is the ability to provide secure and role-based access to the data. The platform uses a combination of technical controls and policy-based access to ensure that only the authorized users can access the sensitive data. This is very important for organizations in the financial sector, which are subject to strict regulatory requirements for data security and privacy. Palantir's solution is widely used by government and intelligence agencies, as well as by major financial institutions, consulting firms, and other kinds of organizations around the world who can afford it. This is due to the platform's ability to help these organizations to make sense of their own datasets and to identify patterns and trends that could optimize their decision-making. Now, as we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that the company's core business seems to work. It is true that revenue has been growing slowly, which sparked some worries from investors, but the fact that the gross profit is positive means that the main issue is the scalability and the diversification of its operations, which may solve the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, meaning Palantir's clients are relatively robust, which can be a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with a positive free cash flow at the end of each quarter ever since Q1 of 2021. This means that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider is that its liabilities seem to be under control, currently around $933 million, which is mostly constant and slightly decreasing compared to the previous quarters. This is also very reassuring and suggests that Palantir is also keen on making sure that they have a low leverage, decreasing their solvency risks. There's about 33% of institutional owners amongst Palantir's shareholders. So what this means is that Palantir does have a significant endorsement from the money managers, but they are largely outnumbered by the retails, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. It would also suggest that Palantir is good for investment, but if we do so, we must be aware of the people who want to profit off the swings, meaning we need to ignore the short-term volatilities. One key behavioral difference is that institutionals can afford to wait longer for their profits, whereas the retails tend to come in and out in very short periods of time, because they want to make quick profits. Also, institutional shareholders tend to be more active in corporate governance. They are more likely to vote on important matters like mergers and acquisitions, compensations, appointments, and so on. They're also more vocal in their opinions, whereas the retail shareholders, they tend to be more silent and more passive in front of different decisions to be made. Currently, there are around 4.2 million shares shorting against Palantir. Some believe that there might be potentials for a short squeeze, because those 4.2 million shares would need to be redeemed at some point, and right now it takes about 4 days to fully recover. With that being said, I believe that Palantir currently has a certain volume of short positions because people truly believe that the company has a lot of headwind against it. I don't believe that they are concerted, and they're also not entirely institutional. It's important to note that a short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen regardless of how many stars are being aligned. In the current scenario, I would recommend to wait a bit for Palantir before entering in a position, since the recent bulls may have started to pull back a bit. With that being said, I still believe wholeheartedly that Palantir will be able to make back to the new highs in the medium term, because overall, Palantir is definitely one of those stocks that is worth investing in for the long term.